First here, Ethereum in danger of 25% crash as ETH prices form classic bearish technical pattern. ETH's price has been consolidating since May 11th inside a range defined by two converging trend lines. Its sideways move coincides with the drop in trading volumes, underscoring the possibility that ETH/USD is painting a bear pennant. Bear pennants are indicators that the market is likely to move down after the price breaks below the lower trend line of the structure and falls by as much as the height of the previous move downside. Due to this technical rule, Ether is at risk of closing below its pennant structure, followed by additional moves to the downside. The height of ETH's flagpole is around $650. If the price undergoes breakdown at the pennant's apex point near $2,030, then the structure's bearish target will be below $1,500, down over 25% from today's price. Interestingly, the bear pennant's profit target falls into the area that preceded a $250 price rally in the February to November 2021 session. Also, the target is around Ether's 200-week exponential moving average, currently near $1,600. Ideally, the demand zone could prompt Ether traders to accumulate the tokens in anticipation of a sharp upside retracement. If ETH's price continues to rise, then our interim profit target would be the multi-month downward sloping trend line that has served as resistance in a falling channel pattern. ETH has been bouncing back after testing the demand zone and lower trend line of the falling channel as support. This could push Ethereum to reach the upper trend line near $3,000, about 50% above today's price by June. If ETH breaks below the demand zone, it could be due to macro risks that have negatively impacted the crypto market so far in 2022. Ether has declined by over 50% quarter to date as investors reduce their exposure to riskier assets, including Bitcoin and tech stocks, in a higher interest rate environment. So here's another chart. Ethereum's correlation coefficient with tech-heavy NASDAQ 100 is at 0.90. It's possible that additional stock market sell-offs could hurt Ether, Bitcoin, Cardano, and other cryptocurrencies. Book's Research, a financial blogger at Seeking Alpha, believes that Bitcoin, Ethereum, and the broader crypto market will recover in the coming years. However, they warn that there is still a risk of deeper losses if the macro environment worsens. I think a lot of people think that this is just a bearish market. We don't know how far down it's going to go. There's predictions on that, but hopefully this is not the end. We don't believe so here at Clockwise Crypto. We believe that, the legit projects are going to hang on. They are going to continue to pour into the market, and eventually we will come out of this on top. Next here, Elon Musk foresees huge use cases for Dogecoin as he champions Doge as a potential currency. Despite crypto prices going down the rabbit hole in yet the bloodiest month this year, Elon Musk has heralded Dogecoin, stoking proponents of the canine-themed coin. Dogecoin co-founder Billy Marcus recently said on Twitter that the reason he liked Dogecoin is because it knows it is stupid. Almost immediately afterward, entrepreneur Elon Musk responded that it has potential as a currency, sending the Doge community into a frenzy of optimism. Billy Marcus, known on Twitter as Shibatoshi Nakamoto, is the co-creator of Doge alongside Jackson Palmer. Palmer is a former software engineer at Adobe. Despite promoting Doge on the sidelines, Marcus dropped the project years ago, citing negative experiences such as scams and a sociopath taking over the community. Musk's reply received 50,000 likes about Dogecoin's potential price through the interest of many Dogecoin enthusiasts. They hope that his response will cause the price of Doge to go up. It has in the past. Anytime Elon Musk says something pro-Doge, it seems to have, spike the price. Same, with that, anything negative with Doge, the price is very volatile. With this market, who knows how much it will rise, but, even a little bit of an increase can be good for Doge holders. Since Musk hosted Saturday Night Live last year, Doge has gone down in value by about 87%. Even though the Tesla co-founder hasn't been very vocal about his support for the coin lately, his pro-growth views continue to make him one of the top influencers for Doge. In an interview with Time magazine, Musk praised Doge as a superior form of digital payment compared to Bitcoin. Later in the year, he announced that Tesla would start accepting payments for merchandise in the cryptocurrency, with plans to roll out the same for Starlink. Last month, the billionaire acquired a significant stake in Twitter. On April 25th, he announced plans to buy the company for $44 billion. This news caused Doge to rise in value by 34%. The speculation is that the billionaire will integrate Doge as a payment option on Twitter. There have been many speculations about what Elon Musk will do next, but one possibility is that he will create a Dogecoin-centered digital wallet or full-blown Doge-based payment platform. This would be free to Twitter users. That's pretty interesting. Price is difficult to predict, but it is clear that Musk has a positive influence on the coin. As of writing, Doge is trading at 0.09 cents after dropping as low as 0.07 cents on Friday. This follows a market-wide decline that was sparked by the UST's depegging. So yes, the UST depegging, which we talked about last week, did affect a lot of crypto prices for sure. Everything is down, but that doesn't mean that it's going to stay down. We think that this is a great time to get into some of your favorite projects, whether that be UST itself or some other, ones that are low. It's like crypto's on sale, so get in while you can. Up next here, Binance CEO CZ to support Terra community but expects more transparency. Changpeng CZ Zhao, the CEO of crypto exchange Binance, recently questioned the idea of hard forking the Terra blockchain as a means to revive the once thriving Luna and UST ecosystems. CZ believes that this might not be the best solution for every project that is struggling and that there are other ways to revive them. CZ said that the idea of a hard fork to Terra 2, which would involve providing a new version of Luna to all holders based on a snapshot of the holdings before the market collapsed, would not work. CZ suggests that reducing the supply of Luna and UST should be done via burning, not forks at an old date, and abandoning everyone who tried to rescue the coin. Instead, he suggested that the Terra community should first use its Bitcoin reserves to buy back UST to revive its pegging. The CEO of Binance, CZ, commented on the potential forking of Terra. He cautioned that forking doesn't create value and advised buying back and burning as a means to revive market value. Despite this, he affirmed his support for the Terra community and called for more transparency from them. So, yeah, just because something happens doesn't mean it's just a horrible project. He believes in them. He wants to see more transparency. Hopefully, with having, support from the Binance CEO, this will help them get back on the right track. According to him, failures can happen, but when they do, it's important to be transparent and quick to communicate with the community. Owning responsibility for the community is key. There have been ongoing rumors on crypto Twitter about Binance's alleged interest in Terra. However, CZ recently clarified that Binance has no active investments in Terra and did not acquire any UST holdings. Binance Labs, the investment arm of Binance, has been involved in many projects over the past 4 years. They've seen varying degrees of success and failures, according to CZ. CZ wishes the best for Terra and hopes it can rebuild itself in a proper and sensible way. Despite personal views, they will always support the community. Binance suspended UST and Luna trading on its platform as the Terra ecosystem commenced its death spiral. As a result, Binance users were not able to spot trade Luna BUSD and UST BUSD pairs. This happened just a day after Terra blockchain validators were forced to take the network offline on May 12th. So, he has some things here on Twitter if you want to check out at CZ_Binance to see more on what he thinks in terms of that UST depegging, what kind of their stance is on that. Like I said, things happen, mistakes are made. Hopefully they can get back on track. Up next here, top crypto analyst predicts strong Bitcoin bounce, says BTC rally will run beyond expectations. A crypto strategist and trader is predicting a big Bitcoin rally. He believes it will surpass expectations. Bitcoin appears to have found a temporary bottom, analyst Justin Bennett tweeted on Monday. The cryptocurrency rebounded after reclaiming a key support level, showing that buyers are still interested at the current prices. There's a good chance that the cryptocurrency market has reached a local bottom and that Bitcoin can reclaim $28,800 today. The relief rally will likely run beyond most people's expectations. At the time of writing, Bitcoin is trading at $30,150. The crypto analyst is also keeping a close watch on the USDT dominance chart, which monitors the valuation of stablecoin Tether relative to the market cap of all crypto assets. USD is rallying, which indicates that traders are selling their crypto assets to store their capital in Tether. A correcting USDT chart suggests that traders are risking their Tether and buying Bitcoin and other cryptocurrencies. Bennett believes that the USDT.D is likely to experience a deep price correction as it appears to be trading within a trend exhaustion pattern. USDT.D is experiencing a broadening ascending wedge and exhaustion pattern. This breaking lower is the relief rally for crypto as it moves inversely to Bitcoin. The objective is 20% lower, which roughly translates to 28% higher for BTC from current levels. So here is the chart here. They have that. They show the objective in this box. They have the chart listed here. This is from Justin Bennett on Twitter. Bennett predicts that if the USDT.D chart experiences a 20% pullback, Bitcoin could reach values between $35,000 and $36,000. Some people are saying that Bitcoin is looking bearish, but the crypto strategist reminds his followers that you can often make a lot of money during a bear market by taking advantage of strong bounces. Many people feel that BTC will never rally again and that it is in a downward trend. This is a pessimistic view, and it may be a good time to invest in BTC because this market does not move in a straight line. So here he's talking about those bounces. He's saying there's a lot of money to be made here. Always do your own research before getting into any trade. Take a look. We never give financial advice here, just kind of our own opinion. Never trade or invest more than you can afford to lose, but for sure, if you have some liquid cash, might be a good time to get in. And up next, $1.9 trillion wipeout in crypto risks spilling over to stocks and bonds. Stablecoin Tether in focus. The cryptocurrency market has lost $1.9 trillion as of August 2018 after reaching a record high in December 2017. This decrease is larger than $1.3 trillion lost during the 2007 subprime mortgage crisis. These losses have caused many people to worry about the crypto market could negatively impact traditional markets such as stocks and bonds. BTC's dramatic price drop from $69,000 in November 2021 to around $24,300 in May 2022 has caused a sell-off frenzy across the crypto market. Cryptocurrencies have been struggling recently, and this has unfortunately extended to stablecoins. These tokens are designed to be as stable as the US dollar, but they haven't been able to meet that goal recently. For instance, Terra USD, or UST as we've been talking about, once the third largest stablecoin in the industry, lost its dollar peg earlier this week, falling to as low as 0.05 cents on May 13th. As the largest stablecoin by market cap, Tether USDT briefly fell to 95 cents on May 12th. Unlike Terra USD, Tether managed to recover back to near $1, primarily because it has a reserve system in place that claims to back its dollar peg. But that is where the trouble begins. According to a warning issued by rating agency Fitch last year, the agency feared that Tether's rapid growth could have implications for the short-term credit market, where it holds a lot of funds according to the company's reserves breakdown disclosed. If traders decide to dump their Tether, the most popular dollar-pegged stablecoin in the crypto sector, it could destabilize the short-term credit market. Fitch noted, the credit market is already struggling under the weight of higher interest rates. If Tether starts selling its commercial paper, treasury notes, and corporate bonds, it could put even more pressure on the market and drive rates even higher. So, a lot of people are thinking, and myself included, I kind of think that the inflation and things that are happening in the just regular stocks, bonds, things dropping. For me, I feel like that is impacting the crypto market other than the other way around. They're saying some people think, oh, the crypto market is the one impacting this. I don't know. What do you guys think? The signs are already visible. Tether has been reducing its commercial paper reserves during the crypto correction in the last 6 months. Its chief technology officer, Paolo Ardoino, confirmed this on May 12th. There has been some speculation that the financial troubles of last year might soon spread to the traditional market. Tether's decision to sell its commercial papers and certificate deposit holdings before maturity could mean paying several months of penalty interest. They could be forced to sell their liquid treasury bills, which make up 44% of their net holdings, according to Joseph Abate, managing director of fixed income research at Barclays. Robert Armstrong, author of the Unhedged newsletter from Financial Times, has voiced his concern about stablecoins. He believes that if the peg breaks, there could be far-reaching consequences that extend beyond the cryptocurrency market. Here's a tweet out from Suburban Drone. Crypto losses now equal 1.7 trillion. He has a chart here showing here. There would be the global meltdown. If you want to read more on that, feel free. And last but not least, we have some updates on Cardano. 3 reasons why Cardano can sink further despite ADA price bouncing 58%. ADA surged to an intraday high of 60 cents on May 13th, a day after rebounding from its week-to-date low of 38 cents. This was a 58% rally in just 5 days. Price action in the crypto market has mirrored that of the general markets, with top cryptocurrencies Bitcoin and Ether rebounding by 23% and 25.75% since yesterday's lows. However, the recent ADA recovery doesn't guarantee an extended uptrend. Here are 3 factors that suggest it won't last. Cryptocurrencies like Cardano have been following the price action of U.S. equities, especially tech stocks. On May 13th, the correlation coefficient between ADA and the NASDAQ composite was 0.93, meaning that any major stock moves would likely steer Cardano in the same direction. The chances of NASDAQ undergoing a sharp recovery are currently slim, as analysts highlight the overstretched valuations of the big tech stocks and their probability of crashing further in a higher interest rate environment. Richard Waters of the Financial Times seems to think that the axe is hanging over high-growth tech companies. Valuations became too stretched, and the market is having a hard time finding its nadir. Here are the top 10 crypto assets recovery in the past 24 hours from Masari. Just kind of gives a good overview there. Here we have some stock market crash chart. Cardano's positive correlation with NASDAQ could lead to more sharp declines in the ADA market, at least for the time being. Pseudonymous analyst Kate Capo of Crypto has observed that ADA could decline to the 30 cent to 35 cent range shortly, given its confirmed pattern of the 5th wave of a bearish Elliott wave setup. The target range for Bitcoin coincides with the support area from January 2021 that preceded an 850% bull run. Cardano has been in a downward trend with multiple breaches of its descending channel. This is another sign of the coin's weakness. ADA has been steadily trending lower following the path outlined by the 2 parallel trend lines. This demonstrates that traders are buying near the lower trend line and selling near the upper trend line. But on May 12th, ADA USD broke down below the lower trend line near 0.568 cents, showing that traders ignored the buying opportunity. Instead, buyers showed up near the 0.378 cent level to accumulate ADA, leading to the price rebound. However, the trading volume backing the recovery move was lower than during the sell-offs, indicating a weakening rebound trend. Simultaneously, the upside retracement move showed signs of further weakness after testing the descending channel's bottom as resistance. So here are some other charts. Here's the ADA USD 2-day price chart featuring the Elliott wave setup. Here is I can't see that one, but another chart. Here we go. Here's the ADA USD daily price chart, so you can see just some kind of different technical analysis here. This showed that the breakdown was confirmed and the bulls were less likely to flip the price ceiling to support. If they failed to do so, then ADA's likelihood of continuing its prevailing downward trend would be much higher. Conversely, if ADA moves decisively above the channel's lower trend line, it could test its upper trend line near $1. So you know here at Clockwise Crypto, we are very bullish on Cardano. We really like the coin. I definitely don't think it's going anywhere, regardless of how many price dips it takes. What do you guys think? Are you guys in for Cardano? Not? What are your top coins that you like? That is all we have for you today. Thank you so much for watching. Make sure to like, subscribe, hit that notification bell, and we'll see you next time.